Hey everyone, and welcome back to the Deep Dive. Today, we're diving into the world of real estate investing. But, get this, we're going way beyond just buying a house and hoping it goes up in value. We're going to be looking at an Investopedia article by Andrew Beatty.
Okay,
It's called How to Make Money in Real Estate.
sounds good.
And I'm really excited to unpack this with you. I think there's so much more to real estate than meets the eye.
Yeah, this article is really interesting, especially in terms of like all the different ways you can potentially profit from real estate. It's not just about owning property.
Okay, so let's just jump right in. The article starts by talking about appreciation,
Hmm.
which I think is how most people think about making money in real estate.
Right.
Just buy a property, hold on to it,
Yeah.
and hopefully it increases in value over time.
Yeah, but it's important to understand what actually drives appreciation, especially for those who are new to real estate investing.
Okay.
It's not just a matter of time. Location is key, obviously, but development and property improvements play a huge role. And this is true for both residential and commercial real estate. So it's not just about finding a decent property in a decent area. You really need to think about the potential for growth
Exactly.
and how you can add value.
Let's say you buy a house in a neighborhood that's on the upswing.
Uh.
Maybe new businesses are starting to move in,
Okay.
or there are plans for a new park or public transportation. So as the area becomes more desirable, the value of your property is likely to go up.
It's like riding the wave of development.
Exactly.
But you can also create your own mini wave by making improvements to the property itself.
Absolutely. Even something as simple as a kitchen or bathroom remodel can significantly increase a property's value.
Wow. So we're not just passively waiting for things to happen. We can actively influence appreciation. I'm curious about something, though. The article mentions inflation.
Right.
How does that play into all of this?
That's a great question. Inflation can push prices up, which might look like appreciation, but it also affects your purchasing power.
So explain that a little bit more.
So imagine your property value goes up by 5%, but inflation is at 7%. So you've actually lost buying power.
Oh.
It's like running on a treadmill. You're putting in effort, but you're not really moving forward.
So how do we make sure we're actually making gains and not just getting tricked by these inflated numbers?
You need to look at real returns. Calculate the return on your investment after adjusting for inflation.
Okay.
There are tools and formulas for this, but the key is to look beyond just the price increase and consider what that increase actually means in terms of your purchasing power.
That's a really important point. It's not just about the numbers on paper, but what those numbers represent in today's dollars.
Exactly.
So appreciation is a key part of the real estate puzzle, but it's clearly not the whole story. The article also talks about rental income as a way to profit from real estate.
Yes, rental income is a great option because it can provide a more consistent stream of cash flow than waiting for appreciation. And there are a bunch of different types of rental income to consider.
Oh, okay. I'm intrigued. Tell me more about these different types.
Well, you have the traditional residential rentals, like apartments or houses.
Yeah.
But you can also explore commercial rentals,
Okay.
which could be anything from office spaces to retail storefronts. And then there's a category that might surprise you,
Okay.
income from undeveloped land.
Wait, undeveloped land. You can make money from that.
Absolutely. The article mentions that you can earn royalties. If there are valuable resources discovered on your land, like minerals,
Oh, wow.
or let's say a company needs to build a cell tower, they might pay you to put it on your property.
I never would have thought of that. So even if you're not ready to build or develop a piece of land, you can still generate income from it.
Exactly.
What about commercial rentals? What are the advantages there?
Commercial rentals often involve longer lease terms, which can provide more predictable income.
Okay.
Plus, you can sometimes negotiate options within the leases that give tenants certain rights, which can add another layer of income for you.
That's really clever. It's like building an extra profit potential right into the agreement. So we've covered appreciation and rental income. Two powerful ways to potentially make money in real estate. But what about the actual buying and selling process? Are there different strategies there?
There certainly are. And the article breaks down three main approaches:
Okay.
buy and hold, flipping, and vacation rentals. Each one comes with its own pros and cons. So it really depends on your goals and risk tolerance and how much time and effort you're willing to put in.
All right, let's dive into these strategies, starting with buy and hold. This one seems pretty straightforward. You buy a property and hold on to it for the long term,
Right.
but I'm guessing there's more to it than that.
You're right. There's definitely more to it than just sitting back
Mm-hmm.
and watching your property appreciate. It's about actively managing the property,
Okay.
generating consistent rental income, choosing the right tenants, and making strategic improvements.
So it's a long game, but requires a hands-on approach.
It can be, but you could also hire a property management company to handle the day-to-day tasks that can free up your time. But it also comes at a cost.
That makes sense. It's a trade-off between control and convenience. Now let's talk about flipping houses, which seems to be pretty popular these days.
Yeah.
You buy a property that's undervalued, make some renovations, and then sell it for a profit. What are the key things to keep in mind with that strategy?
Flipping houses can be tempting, but it's not for the faint of heart.
Okay.
It requires a deep understanding of the market and the ability to accurately estimate those renovation costs.
It sounds like you need to be part real estate expert, part contractor, and part financial wizard.
You're not wrong. And speed is of the essence. You need to complete the renovations quickly to minimize your holding costs and maximize that profit margin. You want to make those smart, high-return fixes that appeal to buyers.
So it's not about doing a complete overhaul. It's about making strategic upgrades
Exactly.
that add the most value.
And remember, the market can change quickly. What's hot today might not be so desirable tomorrow. So you need to be adaptable and have a solid exit strategy.
Right, you can't get emotionally attached and need to be prepared to sell, even if it's not for your ideal price.
Exactly.
Okay, let's move on to vacation rentals. With Airbnb and Vrbo, it seems like everyone's jumping on this bandwagon. What are the key things to think about here?
Vacation rentals can be a good way to generate income, especially if you have a property in a tourist destination.
Okay.
But there are a few things to keep in mind.
Yeah.
Location is key. You want to be in an area that attracts tourists year-round, if possible.
All right.
Just like with flipping, you need to pay attention to market trends. What's popular today might not be tomorrow.
So it's all about anticipating what travelers will want in the future.
Exactly.
And of course, presentation is everything. You got to make sure your property stands out.
Absolutely.
Yeah.
High-quality photos, a good description, and positive reviews are all really important.
Yeah.
And then there's the management aspect. Are you going to handle everything yourself?
Oh.
Cleaning, communicating with guests, maintenance, or will you hire a property manager?
That's a big decision. It sounds like vacation rentals can be quite demanding.
They can be,
Yeah.
but there are tools and resources out there that can help you.
Okay.
And don't forget about local regulations. Some places have strict rules about short-term rentals, so make sure you're following the rules.
Great point. So we've looked at 3 different buying and selling strategies: buy and hold flipping and vacation rentals. But what's really interesting to me is that you don't have to be a landlord or a property flipper to invest in real estate.
You're right.
There are other investment alternatives out there.
The article highlights some great options, including REITs, MBSs, MBAs, and even real estate crowdfunding. These can provide exposure to the market without actually owning any property.
Okay, let's break these down one by one. Starting with REITs, what exactly are they?
REITs, or real estate investment trusts, are companies that own, operate, or finance income-producing real estate.
Okay.
They offer a way to diversify
Yeah.
without having to buy, manage, or finance properties yourselves.
So instead of owning a whole building,
Mhm.
I could own a small piece of a REIT that invests in a bunch of buildings across the country.
Exactly. And here's a key advantage. REITs are legally required to distribute at least 90% of their taxable income to shareholders as dividends.
Oh, wow. So that could be really attractive
Yeah.
for investors looking for regular income.
Yes.
So it's a way to benefit from both appreciation and cash flow, similar to owning rental properties,
Right.
but without all the hassle.
Exactly. And there are different types of REITs, each with their own focus.
Okay.
Equity REITs invest directly in properties. Mortgage REITs invest in mortgages. And hybrid REITs do a bit of both.
Okay. So you can choose the type that aligns with your goals.
Exactly.
What about MBSs? Those sound a little bit more complex.
MBSs, or mortgage-backed securities,
Mm.
are essentially bundles of mortgages that are pooled together and sold to investors.
Okay.
When you invest in an MBS, you're essentially lending money to homeowners
Oh.
through those mortgages.
Mhm.
And your return is based on the performance of those mortgages.
So if homeowners make their payments on time,
Mm-hmm.
I receive regular interest payments,
Exactly.
but there's also risk.
Right.
What if interest rates go up or homeowners default?
If interest rates rise, the value of your MBS might decline.
Okay.
And if homeowners default on their mortgages, your returns will be affected.
So they offer potentially higher returns than bonds, but also come with more risk.
Exactly.
It's all about understanding the trade-offs. And just like REITs, there are different types of MBS
Right.
with different levels of risk and return.
Okay, so we've covered REITs and MES. What about MELANCs? How do those fit in?
MAS, or mortgage investment corporations, are kind of like REITs, but are focused specifically on investing in mortgages. They pool money from investors and use that money to give mortgages to borrowers and then generate income through those interest payments.
So another way to tap into the market without actually owning property.
Exactly. MSEs can offer diversification
Yeah.
and potentially higher returns than traditional savings accounts. But they also come with some level of risk, right? All comes back to risk and reward. Now we have two more alternatives to explore: REIGs and real estate crowdfunding. Let's dive into those after a quick break.
All right, welcome back.
So before the break, we were talking about MICs and how they offer a way to invest in real estate without directly owning any property.
Exactly.
So now we have two more to go: REIGs and real estate crowdfunding.
Right, those are really interesting options. They provide some unique avenues for investing.
I'm especially curious about REIGs. It sounds like you can pool resources and knowledge with other investors, which could be
Yeah.
really beneficial.
REIGs, or real estate investment groups,
Well,
are basically partnerships that are formed to invest in real estate.
okay.
They pool money from a bunch of different investors
Yeah.
to buy, manage, and then eventually sell properties.
So it's a way to access larger projects than you might be able to do on your own.
Exactly.
What kinds of projects might REIGs invest in?
They could invest in anything, from apartment complexes and commercial buildings to land development or even single-family homes.
So there's a lot of diversity there.
Yes. And one of the big benefits is the shared expertise.
Right, so you're not just pooling money, you're also pooling knowledge and experience.
Exactly.
That could be so valuable for someone who's new.
Absolutely. You can learn from other investors, get insights into different markets, and benefit from everyone's decision-making.
So it's like a way to get your feet wet
Yeah.
without going it alone.
Exactly.
But are there any downsides to REIGs?
Well, as with any investment, there are risks. It's important to really vet the
REIGs?
and their management team.
Hmm.
Before you invest any money,
What should you look for?
you want to understand their track record, their investment strategy,
Yeah.
and their fee structure.
So transparency is key.
Yes.
You want to make sure everyone's on the same page.
Yeah.
And that there are no hidden agendas.
And like with any partnership, there's always the potential for disagreements
Right.
or conflicts of interest. So you want to have clear communication and a solid partnership agreement.
Great points.
Yeah.
Okay, let's talk about real estate crowdfunding. It seems like that's becoming more and more popular.
Yeah. Real estate crowdfunding is pretty cool.
What's the appeal?
It basically connects investors with real estate developers who need funding for their projects. So you can invest smaller amounts of money in specific properties or projects online.
So it makes real estate investing more accessible?
Exactly. You can invest in a huge range of projects with relatively small amounts of money.
That's awesome. But what about the risks? It seems like there could be a lot of unknowns.
You're right. Due diligence is super important. You need to research the platform itself,
Okay.
their track record, their fees, and their investor protections.
So you want to make sure it's a legitimate platform.
Yes. And then you definitely want to look at the projects themselves, the sponsors, and make sure it's something you're comfortable with.
So it's all about doing your homework.
Exactly. Don't just blindly invest. You want to find experienced developers with a solid track record and projects that have a good business plan.
Great advice. Okay, so we've covered so much ground here. From the traditional to the more innovative, it's clear there's no one right way to invest in real estate. But with so many options, how do you choose?
That's where it's important to understand your goals, your risk tolerance, and your financial situation. Are you looking for steady cash flow, long-term appreciation, or maybe a bit of both?
It's like picking the right tool for the job.
Exactly. Each investment option has its own pros and cons, so it's about finding the best fit.
This has been a really great deep dive into the world of real estate investing. I'm walking away with a much better understanding of the different options and what to consider.
And remember, knowledge is power. The more you learn about real estate investing, the better decisions you can make to achieve your goals.
Absolutely. It's not about getting lucky. It's about being informed
Uh-huh.
and making smart choices.
Exactly.
Well, thanks for joining us today on the Depth Dive. We'll see you next time.
So before the break, we were talking about MICs and how they offer a way to get into real estate investing without directly owning property.
Right.
Now we've got REIGs and real estate crowdfunding.
Yeah.
These are kind of unique approaches
Okay.
for those looking for something a little more specialized or
Okay.
collaborative.
I'm really curious about these two, especially REIGs. It sounds like a way to kind of pool resources and knowledge,
Exactly, with other investors.
which could be really beneficial.
REIGs, or real estate investment groups,
Yeah.
are essentially partnerships
Okay.
that come together to invest in real estate. So they
Uh-huh.
pool their money to buy, manage, and eventually sell properties.
So it's a way to get access to bigger projects
Yeah.
that you might not be able to handle on your own.
What kind of projects might REIGs invest in?
They can invest in anything from apartment complexes, commercial buildings, land development projects, even a portfolio of single-family homes.
So a lot of possibilities there.
And one of the key benefits of REIGs is that shared expertise.
Oh, that's right. You're not just pooling your money, but also knowledge
Exactly.
and experience.
It can be invaluable for someone who's just starting out.
Especially for beginners, yeah.
Yeah.
You can learn from more seasoned investors, gain insights into different markets, and benefit from the group's collective decision-making.
It's like a support system.
Yeah, exactly.
So you're not just out there on your own.
Right.
Are there any potential downsides to REIGs, though?
Just like with any investment, there are risks.
Okay.
It's really important to thoroughly vet the reg and the management team.
Before investing,
Yeah, before you put in any money.
what should you be looking for?
You really want to understand their track record, their investment strategy, and their fee structure.
So transparency is important,
Yep,
making sure everyone's on the same page. And there are no hidden agendas.
Yeah, and just like any partnership, there's always the potential for disagreements.
Oh, right, of course.
Yeah.
Or conflicts of interest.
So make sure you have clear communication
Yeah.
and a solid partnership agreement.
That's a good point. Okay, let's move on to real estate crowdfunding, which seems to be gaining a lot of traction lately.
Real estate crowdfunding is interesting because it allows individuals to invest in specific projects, often with relatively small amounts of money.
Okay.
It kind of opens up.
Yeah, it makes it more accessible
Exactly.
to people who might not have a lot of capital to invest.
Right. And you can invest in a wide range of projects,
Yeah.
from those single-family homes all the way up to large commercial developments.
That's pretty cool. But are there any risk involved?
Yeah, you always have to be careful. It's important to do your due diligence.
What does that involve?
You want to research the platform itself,
Okay.
look at their track record, their fees, and investor protections.
So you want to make sure it's a legitimate platform.
Exactly.
Yeah.
Then, of course, you want to scrutinize the project sponsors
Right.
and the individual projects themselves.
So just make sure it's a good fit for you.
Right. Look for experienced developers
All right.
with a solid track record.
Okay. And projects that have a good business plan
Right.
and realistic financial projections.
Exactly.
Well, we've explored a lot today. From the traditional to the more innovative, there are so many different ways to invest in real estate.
Yeah, it's not a one-size-fits-all approach.
So how do you even begin to choose the right path?
Well, you need to consider your own goals,
Okay.
your risk tolerance, and your financial situation. What are you looking for? Steady cash flow, long-term appreciation, or maybe a combination of the two.
It's like choosing the right tool for the job.
Exactly. Each option has its own pros and cons. It's about finding the right fit for your individual needs.
This has been such an insightful deep dive into the world of real estate investing. I'm walking away with a much better understanding
I'm glad to hear that.
of all the different opportunities and the key things to think about.
And remember, knowledge is power. The more you learn about real estate, the more informed decisions you can make, and the better you'll be able to achieve your goals.
Absolutely. It's not about getting lucky. It's about making those informed choices.
I agree.
Well, thanks for joining us on the deep dive today. We'll see you next time.